discussion right now about rising interest rates and inflation, what better time to talk about what actually goes into your monthly mortgage payment and ideas and ways to think outside of the box to get that monthly payment a little bit lower. What goes into a monthly mortgage payment? Well, there's 4 to 5 things typically that you'll have within the monthly mortgage payment. First, you have principal, then you have interest, then you have your escrows. That's going to be property taxes and homeowners insurance. And last, you'll have mortgage insurance. What part of those elements can you work on to try to get that monthly payment a little bit lower with what's going on right now in the economy? So, number one, of course, you have interest rates. Now, just because rates are going up doesn't mean you can't do things to try to combat that. We have lots of things you can do, such as one, buying down that interest rate. 2, you can do a 2-1 buy down or other types of buy down options. You can also, number 3, do an ARM. Depending on the elements that you're working with and what you're looking at as far as when you think you might refinance in the future, they don't always make sense. But the buy down options, the 2-1 buy down option or other buy down options are absolutely great options to try to lower the monthly principal and interest portion of your payment. Now, number 2, you can also work on your homeowner's insurance. Now, that doesn't just mean shopping around with homeowners insurance companies. That also means taking into consideration what types of homes you're looking at. So, if you're looking at an older home, maybe a home that has some issues, maybe it has a pool, there's lots of different elements that you might want to check into with your homeowner's insurance company before you even write an offer. And make sure that the home that you're looking at isn't going to have outrageously high homeowner's insurance premium. It's also good to kind of just check in on what types of homes would have a more reasonable homeowner's insurance premium. The next thing you can also do is really take a look with your realtor at property taxes. This part of the mortgage payment, of course, you don't have a lot of flexibility. If you have already picked the home, you are stuck with the property taxes for that home. But something you could do up front to try to combat this, your realtor can absolutely help you out in this area by pointing you in the right direction of some areas, some towns, some locations that have a little bit lower overall property tax. So, great way to take a look at that. Now, a couple side notes. Conventional loans don't require you to pay your property taxes and homeowners insurance or your escrows as part of your monthly mortgage payment. Now, this may look attractive because overall it makes you feel like you have a lower monthly mortgage payment, but you're still going to have to pay those bills. And something that not everyone knows is that if you do not escrow your payments through your servicer on a conventional loan, you will have a slightly higher interest rate. That's because we see it as riskier. If we're not the ones that are paying your property taxes for you and your homeowner's insurance for you to make sure that they're getting paid, obviously as your servicer, we have some skin in the game with your home, and we want to make sure that it's insured. We want to make sure that we're first in line on the lien, and we don't want to have a property tax lien, and we don't want to have some kind of disaster happen and you can't rebuild the home, right? So again, it's riskier from our perspective, and therefore you will have a higher interest rate if you don't escrow your property taxes and homeowners insurance. And of course, lastly, if you are going to put 20% down, you can lower that payment not only by having a lower principal balance, but also by avoiding that mortgage insurance again on a conventional loan. Now, that is conventional specific. So one other thought is make sure you get that credit score as high as you can possibly get it. Not only will it help you with getting a better interest rate, but it will also help you get into that loan program that's really going to be the best fit for you and the lowest overall monthly payment. Okay, guys, I hope that helps somebody out there. If you have any questions, please let me know.